Hey everyone, and welcome to another explainer. Now, if you've ever stared at a stock market chart and felt like you were just watching this completely chaotic tug-of-war between buyers and sellers, well, you are in exactly the right place today. We're going to decode two of the absolute most fascinating, classic reversal signals in all of market charting, the morning star and the evening star. We're going to look really closely at those precise split-second moments when one side totally loses its grip and the other side just swoops in and takes total control.
Okay, let's dive into this. Here is our agenda for today. We'll start with Section 1, the power of 3 candles. Then, Section 2, decoding the morning star, followed by Section 3, conditions for a strong signal. After that, we'll hit Section 4, decoding the evening star. And finally, we'll wrap the whole thing up with Section 5, finding patterns on charts.
All right, kicking things right off with Section 1, the power of 3 candles.
So, if you've been following along with our previous breakdowns, you already know a little bit about the stories told by single candlesticks, right? We've talked about the hammer, the dragonfly, the gravestone doji, those single markers that give you a really quick snapshot of market sentiment. But what we're looking at today is completely different. We are no longer looking at just a snapshot. We're looking at a sequence that tells a complete, dynamic story of changing momentum. The absolutely crucial point here is that it takes exactly 3 candles, working together in a very specific chronological order to form these patterns. You literally cannot have a morning star or an evening star with just 1 or 2 candles. It's this progression across 3 distinct periods that gives these formations their highly reliable reputation for signaling a major trend reversal.
Moving right along to Section 2, decoding the morning star.
So, we are going to deconstruct a scenario where the market is basically bleeding. Sellers are in absolute heavy control. And then, suddenly, they start losing their grip. Let's walk through the chronological anatomy of this reversal. In step 1, the pattern kicks off with a really strong, long red bearish candle. The price opens high, it closes low. Sellers are absolutely dominating. But then, we hit step 2. The market opens with a gap down. The sellers are trying to push the price even lower, initiating this gap. But then, something shifts. Buyers actually start fighting back. They enter the market and keep the price from plummeting any further. And this creates a tiny middle candle, which we call the star. Finally, the suspense totally breaks in step 3. The market opens with a gap up, forming a strong green bullish candle. The buyers have officially seized control and the trend is reversed.
Now, what's really interesting about this slide is the middle candle itself, the star. You might assume that because this is a bullish reversal pattern, that tiny middle candle just has to be green, right? Actually, no, not at all. According to the source data, the star's color is completely irrelevant. It can be red, it can be green, it simply doesn't matter. The only thing that little star represents is a moment of pure market indecision. It's that exact moment the sellers run out of breath and the downward momentum just completely stalls out.
Which brings us to Section 3, conditions for a strong signal.
Now here is where we separate the casual observers from the really keen analysts, because look, not all morning stars are created equal. Just spotting those 3 candles isn't quite enough. We really need to know what specifically makes one morning star a truly powerful and reliable signal compared to a weak one. Take a close look at this specific favorable condition. For a morning star to be considered a strong, highly reliable setup, that powerful third green candle should not immediately break the high price established by the very first red candle. I know, this might sound kind of counterintuitive. Wouldn't a massive green candle be better? But based on our source material, keeping that third candle contained below the high of the first candle is exactly what defines a truly favorable condition for a strong morning star pattern.
But what if that third candle does break the high? Or what if you just want absolute, undeniable confirmation? Well, the source data points out that the ultimate confirmation of this pattern's explosive power actually comes from the candle that follows the pattern. Yep, the 4th candle. If that next candle opens with a gap and forms a very strong bullish shape, that is your ultimate confirmation that the buyers haven't just taken the wheel, they have slammed their foot on the gas pedal.
Let's switch gears a bit. Section 4, decoding the evening star.
Let's move to and see how this builds into the exact opposite scenario. We've seen how buyers take control from sellers, right? Now let's explore the bearish counterpart, the evening star. In step 1, buyers are riding high. We have a strong bullish candle where the price opens and closes high. Everything looks absolutely great for the buyers. Then, in step 2, there's a gap up to the star. The buyers try to push even higher, but they are completely running out of steam. Sellers immediately step in, push the price back down and create that tiny star of indecision right at the peak. And then, the floor just falls out in step 3. A gap-down opening leads to a strong closing drop. A massive red candle forms. The sellers have ruthlessly taken the wheel and are just driving the price down.
And this brilliantly illustrates the complete mirror image between these two patterns. The morning star is your bearish to bullish reversal. It's the dawn of a new upward trend after a really dark period of selling. The evening star, on the other hand, is a bullish to bearish reversal. It's the sun setting on a rally, as buyers totally exhaust themselves and sellers swoop in to drag prices back into the dark. It is quite literally market psychology visualized in 3 elegant steps.
Finally, let's look at Section 5, Finding Patterns on Charts. So we understand the theory, the psychology, and the exact anatomy of these 3 candle structures. But theory is pretty useless without application, right? Let's move from the textbook straight to your trading screens. Where should you actually be looking to spot these setups in the wild? Well, context is absolutely everything. If you see a morning star shape just kind of floating sideways in a flat market, ignore it. You must look for morning stars exclusively at the bottom of an established downtrend. That is exactly where they have the power to act as a launch pad. Conversely, you should only look for evening stars at the very top of an uptrend, acting as a ceiling. Oh, and a quick word of warning directly from our source material. Be extremely careful of lookalike patterns. Just because it looks like a star doesn't necessarily mean it acts like one. But don't worry, we'll actually be breaking down exactly how to spot those deceptive lookalikes in a future explainer.
Which brings us to the end of our journey today, and I want to leave you with this final thought. Are you ready to spot the exact moment the market tide turns? Seriously, the next time you open up your charts, don't just look at random single red or green blips. Look for the story. Look for that 3-act play where one side loses its grip and the other takes total control. Armed with your new knowledge of both the morning and evening star, you now have the tools to read that story exactly as it happens. Thanks so much for learning with me today, and I highly encourage you to pull up your charts right now and see if you can spot these patterns for yourself.